weekly, I think it's the largest probate real estate call in America. We get together every week on Thursdays, 4 p.m. Pacific, 7 p.m. Eastern, if you're in Pennsylvania or Eastern time, it's 7 p.m. And we get together and talk about all things probate real estate, whether you're an investor, wholesaler, real estate agent, vendor. We talk about all things and how to make more money and build more wealth in probate real estate. Today's guest, actually, if you follow, my coach is Chad Corbett, my original probate coach. And he had this guest on. But this is an area that I've definitely worked on in my probate business. And I oftentimes get questions asked to me of investors and realtors. Well, why do you have that guest on? Why do you have this guest on? So I thought I just might tee up a little bit. I think that, in business, your goal is to create as much value as possible so that, you get paid. The money we get paid is a reflection of the value we create for other people. Or Zig Ziglar said that you can have anything you want in life if you help enough other people get what they want. And so I look always for a way to spend my time and do three things. Number one is I try to find ways, obviously, to generate listings. I'm a real estate broker in LA. I sell all over California. I work with attorneys and families. Number two, I look to build a referral business. Sometimes that means I help a customer and they're happy and they'll refer me business, or I help a vendor build their business and they refer me business back. And so we want to build our team and help our team grow so when we need them to help our customers, they're available. Number three is team building. I'm always looking ways to help other people build their business within the context of my real estate team. And I have a team of real estate agents across the country, including Florida and Georgia and all over California. So this guy today, Jason, really checks a couple of those boxes because there are times when I, as a salesperson, the customer doesn't want to sell the house. They want to keep it. I don't need to get paid for a mortgage, but I want to get them good service. And sometimes a reverse mortgage is a good solution for a family or somebody who's inherited a property or can't afford it. So it's important that we develop that product knowledge so we can make those good, strong referrals to our customers. Second is referrals. Obviously, the people that we refer business to, we want them to be successful. And quite frankly, while I've just met Jason recently, I have another reverse mortgage rep that I've worked with that we referred to business 2 years ago, we're still working on. And because I'm working the customer and he is, we're teaming up, I think, to give our customer better service and ultimately for both of us to end up getting business. So these are relationships we're looking for. I'm not looking for golden tickets from somebody giving me business. I'm looking to build relationships with people who can. And then number three, Jason's business is national, and I'm building a national probate team. I think it's important to have vendors across the country to give our customers the best possible services as the business continues to grow over time. So I'm excited to bring in today really one of the experts on reverse mortgages. As I mentioned, he was interviewed by my coach, Chad Corbett, did a fabulous job there. And I wanted to bring him into our call here today to share kind of his secrets and knowledge and insights. So Jason Eichmiller, welcome to our phone call today.
Bill, thanks so much for having me, and everybody, all 77 right now of you. It's pretty awesome. Thanks for having me. Hopefully I can give you a little bit of information or insight into this reverse mortgage program. And just real quick, I've started doing them in 2008, and they are very, very misunderstood. And not to say they're for everybody or not for everybody. We can kind of go into who fits the mold and who doesn't. But a lot of my purpose in this whole thing, just like you say, Bill, is to help people. And if you help people, you do your best to educate and just make sure that they're in a good spot. You might not close all the deals, but the goodwill is freaking awesome. Yeah. So that's kind of like where I kind of hang my hat, if you will.
So when I looked you up, as I mentioned before we started, I noticed that you were from Pennsylvania, but you have way too good a tan to be in Ambler, PA. So give us a little background, where you grew up, and then how'd you get into real estate, and then how'd you end up in reverse mortgages?
Yeah, so I grew up in Maryland, actually. Terp, right? Go Terps. Way back in 2002, we won the national championship. My hair, I went to school then, my hair was less gray.
For all the non-people from Maryland, University of Maryland, they're the Terrapins or Go Terps. Nobody else would know that because they never win anything that would be of national prominence. I'm sorry. Go ahead, Jason.
Yeah, but if there's one person on this live call that went to Maryland or understands it, then we have the instant connection, right? So I grew up in Maryland, and I met this girl back when I lived in Baltimore. Like after college, I lived in Baltimore, And I met this girl who was in undergrad. She was graduating at Loyola in Baltimore. So I meet her out and we become boyfriend and girlfriend. But then she graduates and we're doing the long distance relationship thing. So she was very responsible, pretty good at life, even at a young age. So she went to St. Joseph's in Philly for her master's. And I was living in the city with my friends. We were working, but not working too hard. So I figured, hey, I want to keep this thing going. She's got something really good going. So let me jet set, take the hike up 95 to live with her. And we got a place in Philly. So I had the girl, I had a pretty cool place in, Jesse, you'll know this, Northern Liberties, but I didn't have a job.
Uh-oh.
So so that was the one thing, like, oh, how do I make the money to keep the place and keep the girl, right?
Notice you said place before the girl. I'm just noticing that as an editor. Go ahead. How you keep the place and then the girl, not the girl and then the place. But I'm sorry, keep going.
I should script this better, shouldn't I? So I keep seeing these commercials. At that time, Robert Wagner was a celebrity reverse mortgage spokesman. I kept seeing those commercials and it intrigued me. I knew nothing about these things, knew nothing about reverses. I thought that we give seniors money and in the end they lose their house or the government gets it, but it's probably good for them in the meantime. So I was kind of like lukewarm on it, but not educated at all. Most like most people are. So I also saw, while I'm watching those commercials, I saw that company was actually hiring for a call center in Philadelphia. So not having a job, being completely unfamiliar, but seeing the celebrity guy over and over and over again, figured, hey, I'll take the 1.5 mile trek down to Center City to see what the guy is talking about. And when I met him, he absolutely schooled me. He showed me how reverse mortgages work, how they help seniors without hurting their kids. And I thought that was pretty cool. And I had nothing else to do. So I said, why not? I'll start tomorrow.
Wow.
And second month in, I don't want to talk like I'm good at anything, but I adapted to the space pretty quickly and we were selling over the phone all over the country. And I was able to lead the branch in sales a whole bunch of times, make really good relationships, really feel like deep down, I helped a lot of people, ended up running the branch and then left there to kind of pursue a little bit more of an entrepreneurial path. But yeah, reverses have been my home since late December of 2008. So glad to be here.
Great. And now, okay. So first off, everybody on the call, for security reasons, because we do have a lot of people on, we don't let you unmute yourself unless you figure out how to do it. But you can raise your hand in the app or put a question in the chat box. We're always looking for this to be as interactive as possible. So feel free at any time to jump in with questions, and I'll do my best to watch that. And my assistant, Jess, also in Philadelphia, will help us keep an eye on that. So, I've been around a little longer than you. I was around when I think reverse mortgage, let me back up. Reverse mortgage is a product that a lot of people have some negative sense of, don't know why. And I believe the reason why is before you got involved, it was really a misused product. It's one of those things, it was an amazing tool. It's kind of like any powerful tool, gun or whatever. Powerful could be good, powerful could be bad, depends how you use it. And in its first iteration, there was a lot of scamming where people would take seniors, they'd advance a ton of cash, put all some high risk equity annuities, high commission to the salesperson would make a lot of money, the senior was left without any money to live on. It was a mess. And that went on for about 10 years until around 2008 or so. It's almost like reverse mortgages had to reinvent themselves as an industry and I don't know if it was regulated differently or what got involved. But you'll talk to a lot of people who are older who have like this initial, there's something scammy about it. And I would say that probably was true at one point in time, but the industry's changed. Now, where did you come in that cycle? Is that before you? Were you there when they happened, or was that after you, or how'd that work?
I'd say, so first thing I'll say is I know nothing about them. I mean, I can look at it from a historical perspective, but I am not an expert until I sat my butt in that chair and I started getting schooled about these things. Where I think I was, though, is when I came in, anybody could qualify. They were like a NINA, right? Which is like a no doc loan.
Right.
If you were the age and you had enough equity in your house and your house wasn't falling apart, that was important too, then you could get this deal. Still helped scores more people than it hurt.
Yes.
And probably like a 99-1 or a 98-2. The problem is that bad news travels fast. So where we found challenges with it, like not me personally per se, but the reverse mortgage industry. And I kind of started to find this myself as I was talking to these people. I had a lot of people who were back on their property taxes and had so much expenses, like so many expenses, that we could get them a reverse mortgage. I could eliminate their mortgage payment, maybe get them some cash, but they were in such trouble in so many other areas that it just didn't make sense to do the deal. Like it was like you, I don't know, you're bleeding out in 17 different ways and you stick 2 fingers in or 4 fingers in, you're still going to bleed out. It's just going to take a little bit longer.
Right.
So in that case, I realized, so I guess back up, the government changed those rules in 2013. No, 2013 or 2015. I think 2015. My years are all jumbled up. But back around then, the government changed those rules and they started requiring that we look at people's income, that we do a looser debt to income, something similar to what you do with regular mortgages, and we look at their credit. And if the deal doesn't fit, and if it doesn't seem like it's sustainable, then we can't do the deal. And we won't. And I was one who actually, as much as I like commission check, I've got 3 little kitties, of course I do. I was able to partner with realtors. And when they didn't fit the box, even if I could do the deal, well, shit, you can't, pardon my French, I don't know if you can cuss on this, but whatever. It's after hours here in Wellington. So I couldn't do the deal and feel right about myself because, again, it was something that probably wouldn't work for them long term. It's like, man, you gotta downsize. Sell your house. You're not going to move in with your kids. Nobody wants that on a high enough level. But buy something smaller. Then you can sustain yourself. Then we use a reverse mortgage to buy where you basically pay 50% and don't have any mortgage payments. Right. But at least it's all affordable now. Right. And you can sustain yourself. Like I always look at, can you get this tool, because this is all it is a tool just like anything else. But can you get this and can you use it to sustain yourself and live your life? Obviously, there are surprises, right? It's Murphy's Law. Anything can go wrong at any inopportune time. But can you use this as a tool to live life better? Right. That's all.
And where this comes into play, doing probate real estate is a couple places. One is the family inheriting the property, right? So somebody who never owned a house, never really had the income to qualify. Maybe they're living there with mom and dad die, and then 10, 15 years later, they're old enough where maybe they qualify for reverse mortgage in terms of the age, but they don't have really the credit, they don't have the capacity, like you say, they have other expenses. Sometimes they do, and it's they've been paying the mortgage all along, never filed probate, and then we get together with them and change the title, do a refinance into the reverse mortgage, and they can make that work sometimes. So that's one scenario. The other is a common scenario. I'm sure, I imagine you must get phone calls. The classic is the father, mom, or dad got a reverse mortgage and passed away. And kids are living there. What I find most common case is because responsible people are going to right away notify the bank, tells the reverse mortgage company they're going to file foreclosure. They're going to do either a probate or they have an estate plan. But they're people who kind of put their head in the sand and want to live there, and they can't really qualify to sell, to buy a house. They don't want to sell and cash out and buy what they can afford. And then all of a sudden, the mortgage is being foreclosed on. Now they're in a panic mode. You must get phone calls from realtors or borrowers regularly, I would think. They're tracking you down looking for somebody because they're being foreclosed on. True?
Today, I was walking my dogs, and I'm in that lab coat agents group on Facebook. Somebody asked for a realtor down here in Fort Lauderdale area, just randomly asked about, hey, who knows something about reverses? So a few of the realtors that I work with, they're like, oh, Jason Eichmiller, hit him up. So I call her while I'm walking the dogs, and it's like, it's a similar case. Dad died, the house is upside down. She's looking to list it, and she's spending a lot of time. She hired probate. She doesn't really know what to do. So I kind of talked her through, at least like my knowledge. And by the way, just to be honest, everybody, I'm a front end guy. I sell these things. The back end I'm familiar with, but you might have some questions that I can't answer. So always be honest if you do have something that I don't know. But yeah, I talk to a lot of folks where that's a question, like mom and dad have a reverse. They've either passed away or one's going into a nursing home or they need to get rid of, because even though they have the reverse, they got the reverse on a 2-story property. Now they can't make it up the steps, and it's just,
Right.
it doesn't make sense anymore.
Right.
Like, what are my options? And it goes back to something that you said, Bill, in the very beginning, again, that help. I believe in good karma, bro. Like, the more people you can help, even if it's not a deal today or tomorrow or ever, just the more goodwill you're getting out there. And I have enough random wonderful things that happen to me that, I don't know, you just do good for everybody all the time, and good stuff happens.
I agree with you 100%. And don't do bad for people, because it comes back to you. I mean, you know what, the people calling you 5 years later for one commission to find out that the family's just screwed in some situation. It's just difficult. And I think one thing that's changed about these mortgages, again, I know you're not a servicing bureau, you're the originator, but what I can tell you is what's changed is, in the old days, lenders had more of a service mentality and were hesitant to foreclose and kind of drag it out. As long as I, as the agent, called the service department, sent the listing agreement, gave them status, we were reasonable, they would delay. Nowadays, if you call on the phone, they'll say the right things, but after 6 months, that first day, they sell it to some servicing bureau that's really just glorified attorneys, and they start the foreclosure process. And I find, especially here in California, you're on a clock, and it's 6 months until they start paperwork, and then there's going to be a 90-day notice, and there's going to be the notice of trustee sale. And so you got to really get on your game quickly these days, as opposed to the past, at least here in California. I can't speak for everywhere.
Yeah, so one thing, just to cut in before I forget, HUD. So first thing I'll say is HUD is a black hole. I would never rely on HUD for anything. I know that because, excuse me, the company that I worked for, that I ended up running the branch in Philly, we were on, I think, the 16th floor. HUD was on 14 and 13. And I'd go there, I'm like, oh, I know everything about reverse mortgages. I can get stuff done. I'd go down there to get whatever I needed for a client, and I would walk back 2 hours later, scratching my head, my IQ at least 20 or 30 points lower. They're horrible. With that said, though, what HUD will do if it's a traditional reverse mortgage, a HECM, which is like the HUD government one, is you can petition them. If you run past your 6 months, you can petition them to get 2 90-day extensions.
Wow.
Yeah. So that, hopefully, maybe you guys didn't know that, but it's also a question of, when will HUD receive it, and will they actually do anything, or will they pretend to not be able to read? So
right.
That's the asterisk of, you can petition.
Yeah, and there's other options in California. If you're in probate, in many counties and many judges will give you an extension. If there's equity to be preserved, you can file what's called an ex parte, which is one party filing, and ask the judge to issue a stay. It happens all the time in LA County. Other counties, not at all. Other counties, I notice in Orange County, way less sympathy. They'll say, hey, you had 6 months. What were you doing during that time period? Why should we hold the lender and have them lose money when they're, the truth is the lender's not losing money. They're charging.
They're still getting money. The lender wants to push it, man. They've got the interest, like racket.
Interest, penalty interest, fees. Yeah. They get the kickback from the law firm, all that going on. But I'm just telling you, Orange County, my experience, Orange County judges, unless somebody else is different. I know we have Winston and some other Orange County people on the call, but my experience in Orange County is their judges are way less pathetic for extensions. Whereas in LA, you can basically fog a mirror. You can get an extension at least 30, 60 days for sure. So let me ask you, let's go now back to the origination of these reverse mortgages. And let's talk about using them for a purchase product. Do you see, I know it's a product that gets talked about a lot and marketed a lot. You're in Florida, where I imagine if there's any place in the world they're going to be used, it would be there. So you're in ground zero. Do you do many purchase reverse mortgages, or is that just a product that doesn't really get used much?
I got 3 going on right now, actually.
Okay.
I'll tell you, I love them. I love them for the right situation. I'll tell you what my challenges are for them as well, so you kind of know where to fit them in and not fit them in. As I'm not a representative of the reverse mortgage industry here, I'm just telling you guys how it is. Purchase reverses are awesome. Basically, depending on the age, and you can actually, this is something that might surprise you guys, but for the right program, you can actually be 55 and get a reverse. I actually closed somebody yesterday who's 60, and we got him a reverse. So the 62, there are reverses that require 62, but you can be younger. what you're able to do with a purchase reverse, and you think, the reasons why seniors would want to sell their home. They either want to downsize, they're in a 2-story, they want to move closer to their kids. There's some other reasons too. You can
Grandkids.
Yeah, exactly. Be closer to the grandkids, and the kids are like, ooh, be close, but not too close. But it's really cool when a senior, because if you think about a senior situation when they're buying a house, they've either got to be an all cash buyer, and in today's market, an all cash buyer, average house in your neck of the woods, Bill, is probably what, 1.5 or so?
Yeah.
Mas or menos. So you've got to pull a lot of money out of your investments, out of the stock market, when your investments have drastically dropped.
Let's not emphasize that too much.
I will not go down that rabbit hole, but that's a big reason why people are doing reverses these days. I'm seeing a lot. Yeah. So
preserve capital.
What you're doing is you're able to pay, depending on the age, but a little bit, like about half or a little bit more than half. So you pay about half price and you don't have any mortgage payments. So you can hit your finances positively in 2 different directions. One, you keep more money in the piggy bank than if you did a traditional cash purchase. And 2, you don't have monthly payments to make. Now, you do have to pay your property taxes and homeowners insurance and HOA dues if you have those. But you don't have to make the mortgage payment. So if you're sitting on fixed income and you're draining out of your 401k or whatever to live your life, and then the property drops and it's qualified money, so you're getting taxed on it, that's kind of a hard pill to swallow. Right. So I found that the reverse for purchase is a great tweener product, meaning it's for those cash buyers who have some money, but they're not comfortable putting everything down, and they don't want those cash flow implications of getting a traditional mortgage. Right. Does that make sense so far?
No, 100%. I think that all the lender's doing is taking the money and they're investing in a portfolio of stocks and bonds and investments, getting them a higher rate of return than the interest on the mortgage. They're somehow imputing a 5.5% interest rate or 6% rate or whatever the number is. Mm-hmm. They're yielding 8%, making money on the difference. And all the reverse mortgages is a way for you to hold on to some of the equity and do the same thing yourself. And to me, in a market where houses are going up, conservatively 10% in the next 12 months, if you can borrow the money, even at a high rate of 5.5%, 6%, 7%, if it goes up 10%, you're still ahead of the game. And if your investments are getting, now that's the challenge, anywhere near that, then you really have a double win, like you say, is you win on both sides. So it makes a lot of sense.
Yeah, we're using these as a massive hedge against investment loss right now. It's what financial advisors, CPAs, CFPs are really recommending, because in the past, CFPs weren't allowed by their major brokers. They weren't allowed to talk about housing wealth. And one of the reasons, getting back to what you said, is because you have the shiesty reverse mortgage dude who's referring the deal, getting him to get a reverse and referring him to his annuity friend, and they were kind of double whamming on the commission. By the way, sometimes
days they were both. The guy was doing the loan and he was the annuity guy. That's what happened back in the 90s.
Yeah, way before my. That's rough.
And they were getting like a 10% commission on the annuity.
Yeah, that's tough. So one thing I want to mention, kind of the process and the downside real quick to doing the reverse for purchase, because you guys got to know where you are in the market. These things are tough to close. The last one I closed, we squeaked in 30 days. So that is not commonplace. So whenever I'm educating a realtor or a client who wants to do this, I'm saying it's okay, but you kind of got to do this in a softer market, because it's going to be really, you can do it in 30 days, but it's certainly not the norm. So that's thing number one. Number two is, with these reverses, they'll actually, anytime an appraisal is done on a traditional HECM, which is, again, the government reverse mortgage, the one that's mainly done, although I do mostly proprietaries, we can get into that difference in a little if you want. But with the HECMs, you get one appraisal done. As soon as the appraisal's in, you'll submit it to HUD, and they'll do a collateral desk review, which is some sort of antiquated formula where they will tell you, HUD's formula will tell you if the appraisal is kosher or if you have to go and get a new appraisal. You have to, now 90% or so of the appraisals are fine, but if you're on that 10% with a HECM for purchase, then you're definitely not making that 30 days. So it's just one to think about. The way to get around it is if you have a home that you're purchasing for at least, say, I'd say even $600,000 or more, you can use a proprietary reverse mortgage, which still gives the same protections as FHA. It's non-recourse, and we can go down that rabbit hole if you want me to kind of clarify it. But it gives the same protections. It actually qualifies you at a higher LTV, loan to value. And there ain't no second appraisal done unless it's 2 million. So I just closed, the deal I closed yesterday was 2 million. The first appraisal came in at like 2.1 something. So they got the second appraisal, came in at 2, and it was well enough to do what he had to do. So yeah, I hope that makes sense.
Yeah, makes a lot of sense. So let's talk about a case where, because again, we also, in addition to being investors and wholesalers and realtors, we're also probate focused. You know, there are cases where people, inherit a property, they want to purchase it, and sometimes it sounds great, but they got to qualify, or they have to get financing. So talk about the process. Do you ever come across, basically it's a purchase because they're not entitled, but they're in the house already, or they're going to inherit the house. Is that something you come across? To me, it seems like the guidelines will kind of make that too hard for most people, because if they don't have the history of credit, and if they don't have any kind of income, and they haven't been managing their credit, they're not going to qualify. Is this a product that you've seen used in those cases?
So you mean, do people use reverses to kind of buy it off their parents?
Exactly.
Yeah, they can. I don't see it that often. A lot of times people come to me. I think it's smart, honestly. If you're at least 55, you can do it. I kind of get this kind of case by case from realtors. Most of the questions I get, kind of like I said before, is I inherited this house, or I'm a realtor and they want me to sell this house, and more is owed on it than it's worth.
Oh,
What do I do? So if in that case, if more is owed on it than it's worth, and you can just give up the keys to the Porsche, say, hey, I don't want it. All these things are non-recourse. So they can't go after the estate. They can't go after you. They can't go after life insurance, any of that stuff. If there's equity in the house, though, say it's $1 million house and 700 is owed, completely making that up, then absolutely go after that equity. Now on a 70 LTV, it might, with this example that I just made up without really thinking, on a 70 LTV home, you'd have to be pretty old to make a reverse mortgage work.
Right.
But maybe if you're in your 70s or your 60s and you inherit it, you've got some good money, you maybe inherited some other cash because you inherited this house. Maybe it's a $50,000 shortfall to refinance it out with a reverse. So you throw $50,000 into the pot, and now you've got it. Okay. So it's really a case by case thing. But the biggest thing you want to do, certainly as a realtor or as an investor, is you want to get the reverse mortgage statement. So every single month, whoever the contact is gets a reverse mortgage statement. So if you grab one of those suckers, then it might look a little bit like a little foreign to you. But if you'd like, I'll leave my contact information in the chat box. And if you'd like, if you want to run that by me, I can kind of take a look. If you tell me how much you think the house is worth, I can look at the reverse mortgage statement and tell you how much is owed, and then you can figure out if it's intelligent for them to try to buy it, or if they want to sell it, if there's enough juice for them to make some cash and for you to make a commission too. Glad to.
So I think I heard you say on a previous interview that you do business all over the country. Are you in 50 states or certain states? Or
so I own my brokerage, Key Home Lending, and when you're doing mortgages, every single state that you get licensed in, I hired a licensing company just to do it all for me, because I can't walk and chew gum, right? I'm an expert at this stuff. I don't want to be an expert on company financials. So I'm licensed right now. I'll give you the quick list and hopefully not forget anything. Florida, obviously home state, California, Colorado, Pennsylvania, New Jersey, and Maryland. I do have a good network, though. I run a reverse mortgage group of just reverse mortgage originators on Facebook. So again, you give and you help as much as you possibly can. So if you have a situation, Marcia, I see your question. And Chris, I got your stuff too. You're College Park dude. That's awesome. Marcia, I see do you have somebody you can refer in Atlanta? I can probably connect you to somebody good in Atlanta. So anywhere, I'm glad to chat about it and glad to help. If I can do it, great. If not, I know smart people who can.
Fantastic. Well, that's the whole goal here is we have people here from across the country. We want to work together and network. I think we also want to build our business across the country, build a referral business. And so how do you do that? Did you help people in other places? So again, for those who came on who came on after I mentioned it, this is meant to be participative. I see one hand up. Feel free to raise your hand in the Zoom or put a question in the chat box and I'll get you. It really is meant to be participative. I don't leave the ability to unmute yourself just because we've been Zoom bombed a few times. And so for security reasons and to keep the pornography and the unbelievably hateful videos off, we're going to not allow that. But Joanne Stevens.
What's wrong with that, man? Come on.
I don't know.
7 o'clock here.
I don't know. I'm just Joanne Stevens, I see your hand up. And it's nice to see you as always. What's going on? How can we help you?
Well, I'm on the internet right now, and I'm looking up reverse mortgages, and it says that an heir who wants to keep a house can either pay off the HICM or take out a new mortgage to cover the balance of the reverse mortgage. But it also goes on and says if the balance on the reverse mortgage is higher than the value of the home, heirs can buy the house for 95% of the appraised value. Is that true?
It is true. It's that's coming straight from HUD and the FHA. What you have to do, so you have to get in touch with, again, this kind of stretches my expertise because I'm not on that side. But what you want to do is you want to petition the servicer. Now, here's something that you might not know. As soon as the mortgage balance, the reverse mortgage balance becomes, I believe it's either 90 or 95% of the original property value, I believe the servicers are going to assign that loan to HUD. And HUD then has their private servicers who do that thing. So you'll want to get in touch with the servicer. Again, 95% on a $100,000 house ain't too much, but 95% on a $2 million house, then you're kind of like you're working with a little bit of fire that you can use. So yeah, you're right.
Okay, great. Thank you.
Hey, you got it. Thanks for asking, Joanne.
Mm-hmm.
Nice, Joanne. Always great to have you on. Thanks for jumping in. Okay, and where are we at? What's the minimum age for reverse mortgages? Now, I think you mentioned there's a couple different products.
Yeah.
So it depends on the product that you're looking for. But so can you give us a kind of a high level overview of that?
Totally. There's two main products. One is the HECM. That's a government one. The other is proprietary, which are private investors who like the idea of getting compounded interest for a long time. So the HECM, the minimum age is still 62. The proprietary, it used to be 62, then it went to 60. Now it's 55. I think I do more proprietaries than I do HECMs. Again, you don't need the second appraisal like I touched on in the purchase question. You can be younger.
Mm-hmm.
You qualify for a little bit more money, and there's some niche-y reasons as well, but they're good program. Oh, I guess I should also say this is actually important. The HECM, the maximum home value for a HECM, it's the FHA limit, so it's 978, right? So it's just under $1 million. But what if you need cash out of your house? Or what if you're buying a 1.5 property or a $2 million property or a $4 million property? Most of the time in that case, unless somebody is completely free and clear and they just want a line of credit, you're going proprietary because it's way more bang for the buck. Oh, and the fees are less too. So I should say that. But
so for a HECM at 62, what's the loan to value? And then for the proprietary product, if it goes on to 55, what's the loan to value that they can qualify for?
It's completely age dependent. If you do the average age of 70, eyeballing it, the HECM is in the mid to high 40s. I'll tell you this, I'll give you this example. With a proprietary, the loan to value would be in the 50s. I'll give you the example of the 60-year-old guy I closed yesterday, just because, when you close a deal, it's like super fresh in your mind. Mm-hmm. His house was, he's 60 years young. House is $2 million. based on the second appraisal. I was hoping it would be 2.1, but that's what appraisers do. The loan size was 942. So that's about 40, was that about 47 loan to value?
7% loan to value.
Yeah, at age 60. At age 60. So then you go up to age 70, it's going to be in the mid 50s, 80 higher, so on and so forth.
Well, it's pretty sad because I didn't think about, I'm now 63 and I'm thinking we're looking to move to Florida, and I keep thinking I need to pay cash, but now I'm thinking, well, maybe in my case we only have one child and she's done really well. She and her husband have really done well financially. They're not looking for anything from us, so I'm thinking, well, what am I saving the money for? Maybe the equity. Yes, we'll pay that over time, but it makes sense. We could buy more house and a nicer house. Okay, so there you go. It's 47% loan to value at a 60 age as a rough number. But I imagine somebody has a deal, they should call you and you qualify them and give them the specific numbers based on their age and their location and their credit and so on. Okay, great.
Absolutely.
Other question? I'm sorry.
Oh no, I just said absolutely. That's exactly what they.
Okay, good. Any other questions? Again, we have an expert here, and he's not just, I think, again, as I said in the beginning, this isn't just about for your customers. It's also about you being able to refer and help people who may not come back directly to you, but also he's obviously a very successful salesperson. So feel free to jump in, ask questions. You can raise your hand in the Zoom chat or put a question in the chat box and we'll come back and ask you. I see Ellen Corliss. I don't think we've met. I'm going to ask you to unmute if you want to unmute yourself and jump in. Love to have you. Let's see. If you're able to put your video on, that'd be great. If not, I understand. How can we help you, Ellen?
Well, okay.
Sure.
Sorry about that. Yeah,
problem.
I've been hanging out. I'm very new to figuring out this whole reverse mortgage stuff. And I'm trying to answer questions about like which clients of mine in real estate am I most likely to bring this subject up with and to try to learn more about it so that I can advise them. I mean, I've done 2 estate sales at this point. I've got a third one coming along, although it's not quite an estate because they already figured out like the daughter already has her name on the deed and everything. Okay. So who am I targeting? Who are my best prospects to start talking about reverse mortgages? Lastly, I'll say I have a guy who is in Santa Barbara. I'm in North Carolina. He wants to, he's been talking about coming here. He started talking to some folks in Arizona. He was debating between Arizona and North Carolina, and he decided to move to North Carolina. But he keeps bringing up the fact that the agent in Arizona talked to him a lot about how a reverse mortgage could be a really good thing for him. And so that's part of the reason why I'm really curious about like, how can I be a better real estate agent? And I'm not getting that 100% from what we've talked about so far. So that's
let me answer that, Jason. Let me get your answer as well. As a real estate agent, I think that our job is to create value for our customers. Sometimes some of those customers are prospects for reverse mortgages. Sometimes it's their family member who's the customer for the reverse mortgage. Sometimes we don't even know who it is who is going to be the customer. But if we tell our customer, they'll tell their friend or family member, hey, you think about moving, you should check out a reverse mortgage. So I'm really big on constantly educating your client base, even if they're not prospects, because they might know somebody who is. I don't know that I would spend every week on this, but this is the kind of topic that once every 90 days or so, I introduce in my emails, my social media to my clients. And I don't know which ones are going to be interested. All of them probably know somebody, but you never know when somebody's going to raise their hand and say, I'm interested. Jason, what would you say?
Yeah, it just depends on who you normally interact with. So I always like to, like every mortgage program, again, it's like a tool, right? You keep the arrows in your quiver or your tools in your toolbox or whatever analogy you want to use. Reverses are great if you have a senior who has a little bit of cash and they're looking to, again, relocate. It's funny, I used a traditional mortgage, but I relocated somebody from Burbank down to Boca a couple months ago. Excuse me. So if you have a senior who's looking to move. And from talking with them, as a realtor, you normally don't get too deep into their finances. That's my job. But you can kind of get an idea of where their pain points are. The more questions you ask them, the more you'll learn, and the more you'll be able to kind of like direct. But if they're looking at a price point, if they find a house, say whatever, $800,000 house, they love it. But then you've got the question of, man, I love it. I wish I could do this. How many times do you get that, especially in this inflated market, right? I wish I could. I'd love to, but I can't. But do you know that you can't? You might actually be able to. That's where you pull out the tool. So in their case, if it's an $800,000 house and it's a cash buyer, depending on their age, they might just put down $400,000 or $500,000 or $400,000 or $500,000. So they're keeping all that money back in their pocketbook, and they don't have that monthly mortgage payment to kind of impact their cash flow. Once people understand that, it's so powerful. Like, holy crap, I can just like teleport myself back to 2008 or 2009 when the property values were like half or less than that of where they are now. And I can pick up this place. And yes, I know the interest is going to accrue and I'll get less out of the house, or my kids will get less out of my house if I care about that. But man, I can be exactly where I want to be. I can be closer to the kids. We're in the place I want to keep as my forever home, and it's not going to financially hurt me. Giddy up. I'll tell you this. Out of all the purchases that I do, about 70 or so % of them, they will actually buy a more expensive home because their money goes basically twice as far. Right. And they can get into where they really want to be at.
So that helps for people who don't have kids that they worry about having an inheritance for.
For sure.
I'll tell you this. Yeah, here's the thing. If you look at most successful people, like $1 million plus, they've got some assets, they realize that their assets are theirs, that a house, yes, a house is an inheritance, but so is a 401k, so is everything else. I get a little into this, right? Because people will spite themselves to leave an inheritance for a kid, and the kid's just going to sell the thing anyway. But you got to look at everything together and say, number one, how can I best live retirement? Because if you think about helping somebody, I'll butcher this saying, but you always help out of a position of strength, not weakness. If you help out of weakness, and somebody else, the people that you're going to help are probably going to end up helping you. So a lot of these people that I work with, they realize, number one, if I leverage my house, then especially in this depreciating market, I'm not going to be taking out of these other assets that can grow. We can get into the life insurance conversation where you can throw in, depending on the age and the health, you can sometimes do life insurance to pass the house down probate free and tax free. But there's a lot of reasons for a senior leveraging their house to live easier and leaving themselves and their kids in a way better position, if that makes sense.
Yeah, and I think to answer the question again, I would say again, Ellen, I'm interviewing Jason. I'm sharing this with my database of 3,000 past clients, survey influence, referrals, all my social media, because I'm not doing it every day, all day long. I do talk about this topic about every 90 days or so because it's important to a lot of them. And I want to get in that discussion with my clients, what their needs are. And if I'm in the discussion, then I have the chance, opportunity to help them. A couple questions in the chat box. Carrie asked two good ones. If someone has a reverse mortgage, changes their mind 5 or 10 years down the road, can they pay off the reverse mortgage? I think the answer is it's a mortgage. There's a payoff amount, and there's no prepayment penalty on that, correct?
Bingo. This is residential real estate, so no prepayment penalties on anything. Just you can get a reverse mortgage tomorrow, win Powerball, pay the whole thing off, no penalties.
Right. And then we had a question, I think, from Robin before, that how come the family or any original debtor can pay off reverse mortgage? The answer is yes, that anybody, it's a mortgage, so there's a balance, you pay it off. I've done enough of these now where you may or may not want to, like any other mortgage, there's a payoff amount on that loan. And then when would they sign a deed in lieu up front? So there are cases where they're upside down, and that's a case perhaps where the family might take cash. This is for investors. They might take $1,000, $5,000, $10,000 cash and sign a deed of the property. The challenge is it's going to get foreclosed on more so than even regular mortgages, but it's a possibility. And I do know savvy investors who do that. They buy out the family, then they clean the house up. They get a retail price, and there's some equity there when they're done, or they rent. They'll refinance it and rent it out, or whatever, Airbnb, or whatever they would do with it. Then Carrie asked another good question: if a borrower passes away, does the lender sell the home to pay the reverse mortgage and send the balance to the heirs? Jason, I'll let you answer that one.
That is an awesome question. I will say, Bill, you got a smile on your face. You know this answer. No lender ever wants to be in the business of taking and selling homes. So what happens is when you pass away, the house goes to your heirs. So whoever you want the house to go to, they get it. It's their decision. It's their sell. People ask me that. I have kids who ask me that.
Well, hold on now. It doesn't. So technically, the borrower passes, the title doesn't change.
Correct.
It requires the family to change title. That's what probate is. Or if there's an estate plan, maybe the trust will change the deed, or who controls the deed. But if there's no plan and there's no deed that covers it, that's the challenge. And I think the fact is, I believe reverse mortgage holders are notified by the Social Security Department within 30 days of the person passing. Like all bank accounts, they're all frozen. Mm-hmm. So they know that there's a decedent. They know there's a clock that's going to run for 6 months, and they'll start that process. Now the family can do a probate and change title, and they can sell the house, and the proceeds are theirs. And then I think if they don't, what happens is it will go to foreclosure, and like any other foreclosure, that gets bid at the county process in California at least. So the family has the opportunity to sell the property in cash, and I do a lot of those. And I've had many that are behind, and we stopped foreclosure. Then others we closed quickly, and others that we did short sales. There's a million different ways to work it, but the answer is yes. But the property has to be changed title in order for it to change. That's why we're here on Probate Weekly talking about it.
Awesome. Yeah, I'm a 10,000 foot guy.
Yes.
as far as that goes. Absolutely.
But if you find one of those people who have reverse mortgage and they want to sell the property, you Tyler, call me. I can help you expedite the probate process. Depending on the case, I refer to different attorneys throughout the United States. I've interviewed attorneys in 15 states. I work with some national services that can do it faster and cheaper in some cases. So that's something I do regularly when people have that gun to their head.
One suggestion real quick, if I could butt in for a second. I've never done this. I mean, I get a lot of deals, like basically YouTube and referrals. I stay pretty busy. But one thing you might be able to do, backing up a little history or statistics, the average length of a reverse mortgage is about 7 years. So people keep reverses for about 7 years. In October of 2017, these dates are kind of important. In October 2017, they gave a haircut to the loan to values of the reverses. So back before, when you could get 55, now it was like 48 or so. So if you would get a list, and it'll probably be better in a couple of years, but this is just off the top of my head. If you would look at reverses that were originated in 2018 or later, and they've gone through that at least for, 4 years now, almost 4 years.
Yeah.
If you would introduce yourself as a family, I don't know exactly how you'd copyright it, but an expert on inheritance and what you can do with the reverse, because the reverse mortgage guy, unless it's like me, they're not going to talk about that stuff. And if I talk about that stuff, again, it's at a 10,000 foot level because it's not my expertise. But you could get introduced to their kids, and this is completely just building a pipeline, right? Probably not going to get guy in the room stuff, but if you build a pipeline, then once the senior passes, or it's kind of imminent, or they have to move to a nursing home, then you can probably hear my dogs barking in the background. Then it becomes something where if you drip on them and they've got that contact, you might be able to get some deals. Anyway, just thinking there.
Definitely. That's what we want to educate our clients. So Rita says, what if the balance of the house grows higher than the value of the home? Doesn't it have a chance of being upside down? The answer is yes. These happen because you have another factor, which is generally these homes aren't being maintained at the same level as the average house in the marketplace, right? You have older people, they don't get around much, they collect a bunch of stuff. stuff is starting to break, not being used much. So this is happening regularly. Do you see now, Jason, you're at the front end, not the back end of this, but you must know from an industry perspective, is the number of reverse mortgages that are underwater growing? It seems like all the housing values went up so much. There's not that many of them, but there are some.
Correct. Yeah. Right now, our home values, and of course, we can say across the country, home values are up, but in specific areas, like where I'm in West Palm, where you are at, basically most places in California, there values are absolutely cranking.
Right.
There's a lot of equity in a lot of homes.
Right.
So where you could find it though is if somebody's in middle America, if values because of interest rates in middle of America start to drop a little bit,
right,
and they got a reverse in 2016
right,
or 2017 before they did that loan to value haircut, then you might see some stuff underwater. I think I might be wrong, but I think your question, Amrita, it might have to do with what happens if they are underwater. So I'll just answer it. If they are underwater and they're living there, let's say it's a $2 million house and $3 million is owed. Oh my God, what happens? It's crazy. What'll happen is nothing. So as long as you keep your home as your principal residence and you continue to pay your property charges, there's no reverse mortgage police that can rap on your door. When you pass away, then again, your heirs have the chance to do what they want, and you can. Now, it depends on what value the reverse is at. And so I'll separate that 95% out real quick that we were talking about before. I don't know if proprietary reverses allow 95%. I somehow doubt that.
right,
I don't know.
right. Doesn't seem like it. But in general, so the answer is to the person who took out the loan, there's no recourse. For the heirs, it might be upside down. They might not have equity. I see that happen regularly. The houses particularly deteriorate on the older reverse mortgages, where the loan to value kind of start to get to the maximum and the value of the house went down. Hector Aguilar, my colleague from EXP out in the IE, man, what's going on? Welcome to our call. I see you got a
Good
question.
afternoon, everyone. Thank you for bringing Jason on. This is definitely a hot topic right now in this day and age where we're seeing a lot of older folks relocating to different states.
Yeah.
One of my questions I had for Jason is in talking to applicants or potential clients, what's the number one objection that you're getting from them? And number two is, what's the education process that you take them to in order for them to understand the reverse mortgage process?
Cool. Biggest objection, and I'll probably forget your second question. Sorry, my whole COVID just went through my entire family, and I think I still got a case of it. So that's why I'm coughing and not muting myself as I forget to. So the biggest objection is normally, I heard this. So I heard somebody lost their home when they got a reverse mortgage. True. If you don't pay your property taxes, then they can foreclose. But that's the same thing that happens with a regular mortgage. And in fact, if you're free and clear, you're still paying taxes. And if you don't, you have 2 years and you got the tax lien, sir.
Correct.
So that's the biggest thing right there. I heard this. Now, fortunately, I'm a little bit lucky. A lot of people come to me off of YouTube, like educational YouTube videos that I do.
Mm-hmm.
So they're already educated to an extent, although I won't go like completely down the rabbit hole because nobody wants to watch YouTube and go to sleep. So they come to me somewhat educated already. Another question that they have or an objection is the interest compounding. So, and that's normally once we get down the rabbit hole and we're looking at interest rates, we're looking at fees and all that stuff. Well, man, more is going to be owed on my house than it's worth. Or not than it's worth, but more is going to be owed on my house than was owed before. You're right. We go back to, okay, well, why do you need the reverse mortgage? What's it going to do for you? What's it going to free up? So I'll do financial worksheets with people just so that they can get clarity on where they're at and where they want to be. Call it what? The hell to heaven and marketing and all that other stuff.
Right.
So we'll get them really clear on that. And then you're just weighing the scales, right? And it's the same thing with the inheritance question. Excuse me. My kids want to get the house. I want to leave something to my kids. Okay, cool. But you're draining, your investments are down 30%. You're draining down in their qualified money. And so you're getting taxed on them. So what's more important? How long do you think your money's going to last? Is that why your financial advisor told you to look at one of these things? Because the way things are going, you only have 6 years left, but you're 63 and healthy. So what's more important? Shoring this up so that you can save this money, it'll last longer, or giving something to the kids where if this continues on this rate, you're not going to have anything to give to the kids anyway. And
That's a conversation that I typically have with my clients when I'm discussing reverse mortgage with them is balancing out, where are you at right now in terms of what you're receiving? And most of the time they're receiving, at a base case scenario, $1,500 a month between the husband and wife. Very small, right? So I tell them, look, the reverse mortgage is going to be able to do this for you. You have a payment of, let's say, $2,800. You're going to do a reverse mortgage. Let's say you don't receive money from the reverse mortgage. Let's say you just do a reverse and you don't have a mortgage payment. Well, now you have an additional $2,800 that you can use to live a better lifestyle, not to live paycheck to paycheck. And who knows, you might be able to take that $2,800 and $800 of that, put that in a savings, in a CD or something a little more secure, but you're not strapped month to month. Right. And I think that's the biggest challenge that I'm getting them to see is well, what happens over time as the interest compounds and my house, let's say I live another 20 years. Well, good for you. Then you'll have a good lifestyle. You won't have to depend on your children, right? Because many a times they're like, well, my kids will take care of me. Well,
oh yeah,
you have long-term care, and then you have, expenses for, retirement community or what have you, whatever steps you want to take. But you have an additional revenue that you have available to you because you're not making this $2,800 a month, right? So that's typically the conversation I have. And you're right. The second question is the compounding interest, right? Over time is, how about if I owe way more than my house is worth? Well, then you're okay. I mean, they're only going to take 95% of what you owe if it's a government insured reverse mortgage when you pass on. So either you want to be a financial burden to your kids now and kind of hope that they're going to help you, or just be on your own and be independent and kind of take care of your own finances. And you're right. 80-90% of the time when the parents pass on, either through a trust or a probate, they're going to take the asset, they're going to sell it, they're going to divvy up whatever's left over between the 2 or 3 siblings you have. And we think as parents that we're leaving them something of sentiment, something that means something to them. And the truth is, as we're not. They're going to sell it and part ways. Like, hey, let me have my third, let me have my half, and I'll use it for my family and enjoy it now versus the sentimental value.
Exactly.
Hector, it's funny. Every reasonable kid, sometimes you get. My challenge is when I have groups of like 5 or 6 kids. When I talk to them, I'm like, you guys aren't going to do this. You guys are going to. I'm like, I'm telling you the truth. I've done over 400 of these. Unless you have one person who's very headstrong and is going to guide, you're just going to squabble and it's going to fall apart. But yeah, they're just like you're cutting it up, divvying it up so many different ways. You're not going to get much. Second, just to answer your other question, Hector, on education, like if let's say they call somebody from a 1-800 line or something like that, they shouldn't. It's a horrible experience. But if they do, then they'll actually be required to complete counseling. So everybody who does this, they speak with a government counselor. Now the counselor what they do is they get their notepad and like, read, did you know you have to live in this house and pay the property tax? It bores them to death. But if you have a rookie LO or somebody who's a little bit shady and says, oh, it's free money, don't worry about it, the counseling is going to catch that, which is really good. Excuse me, I'm going to put my shades up here.
And that's kind of what I wanted to have you say is that there is counseling available to these consumers that will educate them, that's actually required. So it's not just like you're going in it blindly. You're going to have every opportunity to learn about the program and be able to make a sound financial decision. And like Bill said earlier in the call, it's not like the Wild West days when it first came out. It's more regulated now, and the oversight is to the 20x now. And so for the most part, people are going to make a really sound decision and put themselves in a better financial position by doing the reverse mortgage and enjoying their lifestyle a little bit better.
Hopefully that's the goal. Like my goal with when I send somebody to counseling, I want them to be so educated, again, without turning into an expert or being bored to death, but I want them to be so educated that they come to me afterwards and say, I knew all that. That was a colossal waste of time.
Yes.
Then they're good, they're educated, and no surprises ever.
Hey guys, we got this is a great. I think we could have gone another hour or so, but we're kind of at the end of our hour. Jason, let's get your contact information out there. If somebody want to get in touch with you, get more information, how they get a hold of you.
Yeah, absolutely. So I'm going to, if it's okay, I'll put my info in the box, but I'll give you.
Okay.
My email address, it's just Jason at Key, that's KEY, home lending.com.
Fantastic.
And then you can give me a shout. You know what? I'll do this. Keyhomelending.com. Let's do reversequotes.com. That's a website. And hell, you can give me a shout on the cell. Just don't call me at 2 a.m.
And we'll put all this information in our notes on our YouTube or Facebook. If you're watching us online, there it'll be down below in the description. So look, Jason, thank you so much. You're obviously a pro at this. I really appreciate you being able to share information with us both as far as the product, how to use it, how to work with a professional like you. And as a probate real estate agent, I come across these more and more and want to be more effective. So I really appreciate your education with us today. Thank you so much.
Yeah, no, this was awesome. Thanks so much for having me on. You guys just did an hour talking about reverse mortgages. So I appreciate all of your attention.
And loved it.
Yeah, if you do have specific questions or you need anything, just give me a holler. Don't be shy.
Thanks, Jason. Thanks so much. And for everybody else, this is probateweekly.com. We do this every Thursday, 4 p.m. Pacific, 7 p.m. Eastern. We live stream it on YouTube and Facebook. You can watch it there if you want to get a replay as well. If you register, though, you can come on live next week and ask questions live. We love to make it as interactive as possible. Thanks to Jason. Thanks for everybody with the great questions. I know we had a couple we couldn't get to. I will hit on the YouTube. I see a couple